What is going on YouTube? Happy Sunday. It's Brendan from Market Makers, your home for Wyckoff and Advanced Fibonacci TA. Guys, by request, I want to show you a market cycle, the .com bust, okay? I want to show you the parallels with Bitcoin and the parallels with the current day Nasdaq as well. Real quick, I think you're going to enjoy this video. To join our room, by the way, just hit that join button underneath the video. You can subscribe through your YouTube subscription. And of course, we trade our crypto on BITGET. That link is in the video description. $4,000 in bonuses, no VPN, no KYC. Let's jump into the charts. Now, for you guys that have been watching this channel a while, you've seen me talk about the weekly pattern over and over again, the Gann price pulse pattern, okay? Couple of quick things, and we're going to show you this with the .com crash, okay? So if we zoom out, we know the VPVR, where all the volume, where all the trading occurs, is down here, right at about 9,500, okay? Again, sub 10K Bitcoin. This is before the Fed pump. You see this, the parabolic rise up, the Fed intervention. Here is your pandemic crash. Bitcoin lost 63%. Now, long-term trend for trading, we can pull in the previous bull run. Now we're going back years, going back to 2017. The VPVR doesn't change, okay? Your long-term trend is roughly 9,500. Now, I've showed you how we get to this bottom as well through other means, not just by volume. I showed you this quite simply with the trend-based fib. The same trend-based fib that nailed the all-time high, you can nail the bottom as well. Previous all-time high, market low, current all-time high, the 1618, 10,591. Something very crucial to understand, guys. Every single 3 sigma bubble, whether it's 1929, 1972, the Nifty 50 market, the .com crash, or the great financial crisis, the housing market crash in '08, every single 3 sigma bubble, price went below long-term trend. Again, a market cycle, market history, okay? So let's look at this. You can also get there through a Fibonacci pattern itself, okay? You can use one of my patterns. This is a pattern that I created, or you can get there through other various Fibonacci patterns, but the 886 lines up perfectly with the 1618, okay? So this is something that you can see as well in Fibonacci. Now, if we look at this and go back to the Nasdaq, here's the current day Nasdaq. Now remember, on Bitcoin, that pandemic crash was 63%. Here on the Nasdaq, it was 32%, the same crash. Now remember, that Bitcoin and the Nasdaq have the closest correlation that they've ever had in their history this year, okay? And as you can see, Bitcoin is moving about a 2.0 beta to the Nasdaq because the Nasdaq is largely high-tech, hyper-spec growth stocks. Remember, Bitcoin and crypto are risk assets. So 32% decline, and then you had a parabolic rise up, okay? Parabolic rise up, get up to your top. Remember, Bitcoin, Russell, Nasdaq all made their all-time highs in November, okay? So 153% move up. Now, I know for people in crypto, they look at that and they're like, what's the big deal about that? That's not that crazy. This is euphoric markets, my friends. This is vertical liftoff, okay? Let me show you this. A normal bull run looks much more like this. You see the difference in the candles? Again, with all the Fed intervention, you had the perfect conditions to make a bubble. Cheap money, 25% of the money supply being added to the all the money currently in circulation, 0% interest rates, and you had stimulus being mailed literally to people's homes, okay? And people were stuck on top of that inside in some places of our country much longer than other places. And so you had a lot of people in the markets, a lot of people investing, euphoric rise in the markets. And again, if you look at your long-term trend trading volume-wise, this is pulling it back into 2016. So you're going back. If you look at your long-term trend, it's back by the pandemic lows, which is why you guys have heard me say repeatedly, all these markets are going back to their pandemic lows. That's the long-term trend, okay? They're all going back. So your volume comes down here on the NASDAQ, and you're looking at 6,900 on the NASDAQ, okay? You basically, in TA terms, you're giving up the pump. And that's what you're doing right now in these legs down. And you are still in the first leg down. We're still looking to hold a bottom in the NASDAQ. So this has more room to run. Very, very critical you guys understand this. As this market declines, and keep in mind, moving at that 2.0 beta, if we just came back down to the current candle, down just right at long-term trend, you're looking at a 40% further decline in the Nasdaq. Now, granted, since this is the biggest bubble in the history of our country, you're talking about a bubble in equities, a bubble in bonds, a bubble once again in the housing market. Right now in the housing market, the median household family income multiple required to buy a house is higher than it was in 2008. You take the external factors of 40-year high inflation, soaring food costs, soaring energy costs, according to the UN Food Index, the highest it's ever been for energy and food costs. On top of that, you have conflict, and then everything's in the backdrop of a potential pandemic, the next pandemic. Who knows what else happens, right? Or the war escalating and certain weapons that should not be used being used. That can change the dynamic very quickly as well. But you have to understand the market you are trading in, which is a primary downtrend. Let's forward this. So pay attention to this 32% decline before the bubble rose, okay? Before we had euphoric liftoff. This is very important. Let's go back to 2000. We had a crash before the 2000 bubble got inflated. Do you see this over here on the left? 33% decline. So the Nasdaq crashed 32% with the pandemic crash and then went up 150+%. And then the Nasdaq crashed here 33% and then went up. And this was a massive move, okay, in the Nasdaq. Let's go ahead and get this. This is about 250 or something. Let's go ahead and throw this up there. 278% rise, okay? So you have to understand this is an equities bubble, and the bubble now is bigger than this equities bubble. So when people say Bitcoin, because I see it all the time in Twitter, guys, and I'm not saying this to upset people, but I see it in Twitter. Bitcoin will never lose more than, go below 20K. Bitcoin won't go below 15K. Bitcoin can never go below, just insert the number. What about adoption? What about all the people using crypto? Well, what about these companies? And let me show you something. The reason this is so dangerous, and you need to understand what you're dealing with here in this market, okay? Now, 280% rise. Now, I was about, 20 years old in the dot-com crash. So if we throw down this trend line, okay, this is the crash before the bubble got inflated, before it went supernova, okay? So let's just see where this got to. If this is your long-term trend, I can't show you volume on this particular chart, but if this is your long-term trend, remember this crash, this was about March 2020. Now, March and September are 45-degree angles in a Gann calendar. A lot of crashes and bottoms and tops occur in March and September. March of 2000, you hit your top in the dot-com. March of 2009, you hit your market bottom. So just pay attention to that as well, because September is coming up. Now, we hit the bottom here at September 24th, 2001. Didn't break it though. You broke it over here. You see this? So in 2002 of July, you got below that 30% crash. The 30% crash that took you on a 280% up move. And I can tell you from just having my friends, my sister's friends were older than me. They got me into trading back then. Nasdaq will never go back down there. I mean, this is a 280% up move. There's no way it's going back down below that. And sure enough, it did, because this was a 3 sigma equities bubble and it declined, okay? And it went below long-term trend. And something else to look at when people say, well, how long will Bitcoin stay deflated? How long can it stay deflated? Now, let's go ahead and throw a top on here. This is your top, okay? This is your March 10th, 2000. You have 5,132 on the Nasdaq. And March of 2000. Look how many years this takes for you to get back after you have a 3 sigma equities bubble. You guys have to understand and be realistic of what you're talking about in this marketplace, because most TA people, they're either too young or they haven't studied any history at all in market cycles. They don't understand bubbles, and they don't understand how detrimental and how disastrous they can be. This took you until roughly July 2015, 15 years to go back to that all-time high. 15 years, guys. Now remember, Amazon went down 92% in that dot-com crash, okay? This took 15 years. This is risk. These are high growth technology companies, and they took 15 years to recover. Does that mean the market going forward is going to be exactly like the market was back then? No, but I would tell you it's more dangerous now because of all the different assets that we have in bubbles, because of the backdrop of inflation, which is not going to go away anytime soon. The high prices are here to stay. Whether or not you get peak inflation and it starts to roll over, it doesn't mean the prices are coming down. It's very important to understand. The overall macro backdrop of where Bitcoin is trading is in a primary downtrend in a very bearish market, a very dangerous market, where at some point the Fed is going to break something in the market and you could see mass acceleration towards the downside as well. Okay. So that, just keep all of that in your mind as the backdrop of what you're looking at when you're looking at Bitcoin. In the zoomed out view, you can see this. You can just see the dissension in the marketplace. And just remember, guys, and I'll show you this in the 2018 bull run as well, but you're going to have abilities to trade bottoms, to sell tops, to trade bottoms, to sell tops. Okay, this is where we shorted up here, and this has got this mass dissension. And right now we're accumulating here on the daily time frame, guys. And the primary trend being down, unless that trend is reversed, these are rallies to sell. These are not rallies to buy. In other words, you would be taking profits and things you have profits in on a rally. You might be cutting losses on a major rally because the overall trend is still down. And unless some type of massive catalyst changes that, you are in a descending market with the equities crashing down. Let's go ahead to current time frame. Here you have, on the daily time frame, accumulation. Not going to spend a lot of time here because these are daily candles, but they're doing what they're supposed to do. They're still holding that Gann line. I know that's a noisy chart. Let's go ahead and go forward to the 8-hour time frame, a little bit more interesting, and we're going to go to the 4-hour time frame. 8-hour time frame, as you guys know, we've been tracking the resistance cloud very closely. It is getting thinner. This is late May when it really thins out, but some key things to look at here are indicators. Our volatility is compressing heavily. I'm expecting an upside breakout. We're going to talk about those targets on the 4-hour. And of course, our accumulation distribution is pretty flat, as it should be, because we're just making small wave accumulation patterns. The cloud is thick. As you accumulate, the resistance gets thinner, gives you an ability to break out. Going to the 4-hour time frame, you can see this as well. Let's go ahead and throw some indicators on here. I will throw my Ichi on here. And look how thin the cloud is. You're just kissing the cloud, waving down, kissing the cloud, waving down, until it comes to almost nothing. That's that late March over here. It's almost nothing. You could break out before that. You could end up waiting until that. If we look at our indicators here, volatility is compressing. Volume is down left to right, which is good. You want to see an explosive move. You want tight volatility. You want flat volume, and that's how you get explosive moves in the market, okay? So that's what we want to see. It's the rubber band method, and we want to see a snap to the upside, and we got to look at our resistances. These are the numbers I pulled from the daily. So 31,185, you have to flip that. Remember, you got rejected by it already right here. And if you can flip it and move up, you're looking at 32,991, the 618 at 34,798. I really like this because of the 200 and 233 long-term moving averages providing resistance right here at this level. And as you guys know, if you flip this and are able to move up on my weekly pattern, I really like my 40K level. When I look at my 40K level here, and we've been over this a couple of times, but let's go ahead and show this one more time. When I look at my 40K level, I also have to look at my moving averages and other resistances that are here as well, okay? And if I just go ahead and throw these on, we can look at our, where was our 21? I'll have to change these really quickly. So let's change the EMA to 21. Throw that on there. Right about that 40K level, as you see. And let's change our simple moving average to an EMA, and we'll go ahead and make this 34. All right, let's go ahead and go to 55. A little bit longer term trend there. They're all going to be roughly right about that same area. So when it appears, and it should be right here. Both of these are going to be right around this area. Oh, this is back to the 200. Okay, sorry. There you go, 55. So both of them are right here in the same area. I like this 40,694. This number makes sense to me. if we can flip those lower level resistances. But again, guys, just remember, these are all just bull traps, okay? Until further notice, this next wave up, whether it gets to 34 or 40K, you're just looking for your next wave down, okay? And you're going to have a lot of chances to rally. You had it back in the .com. Here on the DXY, something to remember, the DXY pumps and gets stronger. It did this in the .com crash. It pumps and gets stronger as equities decline and as crypto declines. And you can overlay your market cap here for crypto, and you can see this right here. Here's your crypto top. That's your Bitcoin top. DXY was back down here underneath 94.60 and has done nothing but go up since then. The DXY hit 120 and the .com crash. It's way up here, guys. If the DXY does break out, remember June, the Fed's raising 0.5. It is also the first month they will be doing quantitative tightening and removing 45 billion off their balance sheet, okay, for the first time. That starts June 1st. You're going to see the DXY potentially pivot up, break this resistance line, and continue its march up as these markets continue to decline. But again, just remember, every market, whether you're in the .com crash or in crypto, you will always have rallies. Here in the .com crash, these are big rallies. Okay, these are very big rallies. And this isn't equities. It's not even anywhere near as volatile as crypto is, okay? You can just grab that up to your peak there. I mean, you had 40% move here. So you're going to get big rallies in this descension process. After the longest bull run in the history of the stock market, I don't anticipate it letting go lightly. There will be some type of catalyst potentially. If the Fed breaks something in the market, you could see big moves down, strong rebounds up. But primary trend, guys, just remember their primary trend for now, and it seems to be able to stay that way, is going to be down. Look at the 2018 bull market. This is the same type of thing, okay? This is how bulls get trapped over and over again. You get these peaks, you get these big pumps, people get euphoric. A lot of people don't track markets very closely, obviously. They see these big pumps and they get stuck and you get another leg down. And you're going to get some massive pumps. Like this is a 100% pump. You got to remember where it's pumping from, okay? Deep declination in price. You're going to see this over and over repeat in this market. Be aware, guys. Knowledge is power. Hope you guys enjoyed this video. I answer your comments and questions below, and have a fantastic Sunday, everybody. Another video coming tomorrow.